Okay, as expected, there has been a rate cut and not a CRR cut. But that is just one of the things that the governor announced. I think we have to concentrate on what he said first, a flexible interpretation of the flexible inflation targeting. I think that's an extremely important statement he's making, and that also means what is missing is aligning the CPI to the target of 4% is a phrase that was repeatedly there last year and in previous policies. That is absent, and what they're saying is a more flexible interpretation, which means perhaps that they will not be that strict about 4%. That's a very important revelation of his thinking. The second one, that they're going to look at the, blocks, the fundamental blocks of forecasting. So I think the forecasting models are going to be looked at again. I think the second biggest takeaway for the markets, especially the stock markets, is that the regulatory framework comes with a cost. That when you want stability and inclusion, it will also mean a lesser efficiency. Basically, you take away money for LCR, you take away money and lock it in government securities for SLR. For these purposes, the priority sector, that also takes away from efficiency. So my sense is it's a veiled way of indicating that LCR is not going to be effective on April 1st. We will, of course, ask him that in the monetary policy. On CRR and liquidity, he has only said he will give as much liquidity as needed. There is no indication of surplus. Very clearly, we will take proactive steps, but he is not saying surplus liquidity, which means liquidity as and when needed is the message that's coming. So my sense is it's very clearly on regulation, they will go soft. Flexibility of the flexible inflation targeting will be more adhered to, and there is going to be a redefinition in terms of the macros. They're going to make it smoother or perhaps more accurate. Then I think a very big takeaway is that many banks are unwilling to lend in the call market. They lend in the repo market, not in the call market. There is a fear in the market, in the banks, that if you borrow from repo and lend in the call, then the auditors will ask questions. I think he's telling the bankers, please come and lend in the call market. Auditors will not ask questions. I think that's again a very, very big signal that banks were waiting for, and I'm glad it has been given. But basically for the markets, a 0.25% rate cut and a more flexible interpretation. I would interpret that as almost accommodative, but the stance is still neutral. Let me get to the experts before I come to Ritu, who will have more things to contribute. Upasana, what would you surmise from what you have heard? Do you expect a rate cut in April, for instance?
Yes, of course, Lata. I think it's a very much in line with expectations policy across the board, if you look at. Just want to highlight one thing, that as you mentioned, the flexible inflation targeting. I think earlier we were in doubts whether we will have to wait for 4% to be achieved before an action is taken. I think today's emphasis on flexibility of inflation targeting kind of provides cues on the fact that if inflation is broadly looking ahead in line with 4% target, then growth can be considered as a primary objective. And in this environment, when the growth inflation dynamics was looking fairly benign, I think this was the perfect time for RBI to have acted. And I think more than that, on the second leg is the liquidity angle, wherein the liquidity stance has to be more or less in sync with RBI's policy stance. They have already acted ahead, and that kind of had sets the stage for a repo rate cut. So, the liquidity easing measures which have been announced, and we believe that there will be more coming, but they will have to be on a wait and watch mode. Clearly, they will have to be watching that closely, but liquidity will be playing a much more important role going ahead now that RBI has delivered that 25 basis of rate cut, which was broadly in line with what I think everyone in the market was expecting.
No, but since he says more flexible, are you expecting April cut?
Yes, Lata, we are cumulatively looking at 50 basis of rate cut. So with one gone, I think we have now one more rate cut to go, and it is better to go ahead with back-to-back rate cuts, because the room, I think, for incremental rate cuts more and more will be limited.
Okay. All right. Just coming back to all of you, let me get Kaushik's first thoughts and then go to Ritu. Kaushik, what were your key takeaways, and more importantly, what next?
Hi, Lata. This is, I think, excellent policy decision to cut 25 basis points and don't go overboard on liquidity. RBI has already announced liquidity measures. Governor mentioned the word proactively and stressed on it. So as and when it is required in March, after the OMO purchases are over, if they feel like they need to give more, they'll definitely give more OMO purchases or FX swap, another 5 billion. All those will be coming. As I told you in the expectations part, that I don't expect CRR to be cut, so they haven't touched. At a later point, if it is required, that may be seen, but I don't think CRR will be required, given that in May, RBI will give a very big dividend, 2.3, 2.4 trillion to the government of India. That will also add to liquidity as the government spends. The other thing that caught my attention, and I liked the fact, is that the governor stressed on the part of being monetary policy being forward looking. So you do not need to wait for 4% inflation to start cutting. You have to start in advance seeing the runway. And if the runway is showing you that inflation will average about 4.2 in the next fiscal year, even at say 6% repo rate, your real policy rate is still 1.75 positive. So I think RBI has done the right thing. April, there's another rate cut for sure. And after that, I think the stance will change to accommodative, simply because after 50 basis points rate cut, RBI may not want to reduce the repo rate too much because the Fed has only cut 100 basis points. But if you still want to give some bit of easing, that time you can bring in more liquidity and drive an effective easing by driving short-term rates closer to the SDF rate. So the short-term rates can fall to 575 with the repo rate staying at 6%. And that is how you achieve that, by changing the stance to accommodative, because once you change the stance to accommodative, the liquidity stance also has to be aligned with the rate stance. And in that scenario, you can only pause or cut rates, and then short-term rates need to come to the lower end of the corridor.
Yeah.
That's my view.
Yeah. Yeah. Very important to note that the rupee has actually not moved much. Before the policy started, I noted the rupee, it was 87.46, now 87.48. So despite the fact that the rate cut has come, it's largely priced in and there isn't any further reaction. Let me invite the biggest banker in the country, SBI's Ashwini Tiwari is also joining in. Mr. Tiwari, good morning. Thank you very much for your time. Can you tell us the key takeaways from a banking point of view? They've asked you all to lend more in the call and not keep away. No questions will be asked by your auditors or by the supervision department. Also, more derivatives for insurance companies, to hedge longer term GSECs. More retail participation, can come into the NDSO markets. Those are also been announced. But from a banking point of view, what's your takeaway?
Good morning, Lata. Thank you for having me. I think the rate cut is broadly in line with our expectations and our house view. So no surprises there. The balance point, which he talked about, balance between policy and growth, I think that's very welcome. In terms of banking, I think you already listed out the things which has been there. But the only thing I would like to correct is, it's not that we are not participating in the call money market. We are very much there. And this gives a far more flexibility, the derivatives which have been announced. And more importantly, the cyber things he talked about in the bank domain. We are engaged with them and we'll work with them. I think RBI is very geared up to protect customers from digital frauds. And therefore, overall, in terms of having a whole of system approach with RBI and the government, this is also a step in the right direction. So overall, I would say that the takeaways are that the banks should continue to be cautious, yet be focused on lending and doing the job which they are supposed to do. So that way, the RBI has made our job more simpler and given us the enablements.
But very quickly, Mr. Ashwini Tiwari, a 25 basis point rate cut you had factored in. What does that mean for banks like yourself? Your external benchmark linked book is less than a third of your total assets. But broadly, what do you expect now going forward, the impact on your business thanks to these cuts and the indication that RBI is going to be forward-looking, target the band and not the 4% central level, leaving more room for rate cuts going forward? What will that mean for banks like you?
So generally, when the rate cut initially happens, the deposits get repriced with a lag because the people are, especially in TDRs, are locked in. And the loans, especially this 1/3 you talk about, the external benchmark linked rate, that will be changed immediately. So in the beginning, there'll be some margin pressures. But going forward, as we realign our deposit rates also in line with the rate cut, this will settle down. And we have always given a NIM guidance of between 3.1 to 3.3. This quarter, we were a little lower, but we expect to get back there soon. So therefore, for us also, we'll have to realign a little, both in the deposit and the lending rates as we go forward. And it will settle in after some time.
So, yeah, Mr. Tiwari, the market analyst interpretation was that your NIMs will be impacted by 5 basis, which is the least amongst all the other banks. I mean, HDFC, ICICI all have like 6 or 7 basis. Yours is 5 basis. Is that a correct calculation?
No, I really
just
have not
because of the rate cut.
Calculation. No, I have not looked at that calculation which the analysts have done. So therefore, I can't comment on that. But my basic point is that we'll realign as we go forward by adjusting our deposit rates and also the lending rates. So to look at the rate transmission and also to look at where our margins need.
Mr. Lakshmanan, what did you make of the governor's very, very calibrated comments coming in on the liquidity front? Not promising ample liquidity, but just making it very clear that they will proactively manage it as and when required. Are the markets going to be disappointed, or was this factored in? What were your additional takeaways from his speech? Mr. Lakshmanan, I think you're on mute.
My apologies. No,
Yes,
so this was definitely as per the predominant market expectations. If you look at the markets and the response thereafter, markets have not moved much. You would note the currency level, but importantly the OIS levels, the G6, of course, the yields have moved up a bit. But overall, this being a predominant expectation, I don't think market is disappointed by any means. And in many manners, the way RBI had alluded to supporting liquidity even much before this policy, as well as the governor's speech over here, has given enough confidence that liquidity is clearly a focus and they will not let the markets down should there be a liquidity requirement at all. So overall, I don't think there is anything beyond balance that has been spoken of by the governor's MPC, and I think market would gradually move into an April expectation, potentially for a rate cut. Of course, keeping the inflation dynamic expectations, and of course also looking into how the global macro is developing. With the rate cut expectation coming by, maybe the rates may smoothen down a bit. But overall, I think there is not much to be either overly euphoric or disappointed about.
Okay. Well, the call rate has already fallen, obviously. It's now at 6.35, midpoint between 625 and 650, and I would assume it will eventually go to 6.25. And Mr. Tiwari says we have no objection to lending in the call, but call volumes are in 5 figures. They are in thousands, 10,000s of crores, whereas the TREPS volume is going to 1 lakh crore. So clearly you are preferring the collateralized lending market and not the uncollateralized lending market, and the governor is requesting you all to lend more over there. Call has come down naturally because the repo, the MSF rate, everything would be down by 25 basis. Shobit Malhotra is also with us. Shobit, lots of announcements for your market actually. You all can now participate in the NDS home, and there are also these derivatives available. How does life change for you all? What is also your call on the 10-year bond yield?
Yeah, thank you, Lata. I think initial reaction of the market on liquidity measures has not been too positive. I think market was expecting a change of stance to accommodative. If RBI is confident of providing liquidity, then might as well go ahead and change the stance from neutral to accommodative. So that has been a little bit of a disappointment. I think market was also expecting some more forceful measures on liquidity. So rate cut without liquidity being in surplus on a durable basis may not lead to good transmission. So if we want, transmission of rate cut to happen in the economy and growth to improve, I think it has to be accompanied with far more liquidity to be provided to the system. I think from that point of view, I think market is a little bit disappointed from the policy. I'm not too confident also on the next cut happening in the April policy. There was a lot of reference to global headwinds, uncertainty, global financial markets, volatility. So if that were to increase, I think RBI may choose to wait and watch and then go in for the deciding on the rate trajectory. So I think confidence of the market may be a little bit shaken post this policy. I think change of stance could have been done. More forceful liquidity measures could have been provided. The transmission of rate cut would have been far better. But unfortunately, that hasn't happened. So let's see what kind of measures come out after this 3 or 4 measures which RBI has announced on liquidity, whether we continue to see more of those, or we have to wait and system has to go again into negative and deficit, and then something comes up. So I think a little bit of a proactive approach would have helped the system far better.
Well, absolutely take your point. The stance remains at neutral, not accommodative, and no overt promises of ample liquidity at all. But Mr. Ashwani Tewari, quick question to you about the initial comments made by the governor, where he very clearly stated that they will give sufficient time for transition when it comes to big changes, in policies and guidelines, and where the implications are large, the transitions are going to be done in a phased manner. Now, what is your reading of these statements in the context of the LCR rules kicking in from the 1st of April? Of course, then there's also the ECL transition and the project financing norms. You think the governor's indicating that, that timeline may be extended?
We really can't interpret on what RBI wants to say, because all these three have been around, these draft notifications have been around for some time. And we have already given our inputs to RBI on what we think about each of these and what the improvements could be. So therefore, we will wait for RBI to actually announce a date as to when they will implement. And if and when decided to implement, then clearly the window of implementation will be adequate, because some of these like ECL and all will need substantive IT changes and system changes, which will require a long time. So therefore, and of course, the additional provisioning which will be required. So I think the time factor which the governor is saying, we will see how that happens, because we will wait to hear from them finally as to when they want to implement this.
Okay. No, Mr. Tewari, but I think Ritu is asking a very relevant question. He's for the first time we are hearing the Reserve Bank say that regulatory intent for higher financial customer service or for financial stability like CRR, SLR, LCR, while they have serve a purpose, they come at a cost. We've never heard the Reserve Bank say that, and certainly not on the policy day. So is it a reasonable bet to assume that it won't be April 1st, LCR rules?
No. As banks, we don't bet on any...
We will ask him. We will ask him on your behalf.
Please ask him. So we will wait for...
No, we will ask him on your behalf.
No, thank you for that. But we will wait for the formal announcement. Because we will be ready. I mean, we'll make ourselves ready if and when this is announced. So right now, I don't want to conjecture on it.
Okay. I want to follow up on what the Federal Bank Treasurer, Mr. Lakshman, is saying, that they could have been more generous with liquidity. They could have indicated an accommodative stance. I think that will be kudos to the Reserve Bank, that they have maintained the continuity from December. It is not looking like it is another, Reserve Bank altogether. It is the same economy and it is the same caution. So, Kaushik, your thoughts. Do you think that the market would be disappointed in terms of the governor not being very generous in his liquidity statements?
Lata, I think the governor gave a lot of assurance that he'll be proactive. So RBI is watching this liquidity situation very closely. I don't think, you need to get everything on one day. Obviously, markets will want as much as they could get. But there's a sequencing that you need to keep in mind. So October, we changed the stance to neutral. December, we had a CRR cut. And then we had more liquidity measures before the rate cut. So you had the rate cut. Don't expect everything on the same day. So on April, you'll get another rate cut. And along with that time is the time when you should change the stance to accommodative. Because at that time, once you had a rate cut, you'll not have a rate hike, right? Neutral means you can hike, you can cut, you can pause. But now that you've had a rate cut, April would be a good time when you say, I can either pause or I can cut rates. And that is the time to announce a rate cut and give the accommodative stance. After that, people will take a bet whether RBI will cut more than 50. I'm in the camp thinking that RBI will not cut more than 50 unless the Fed does more than 100 basis points. And it doesn't look like the Fed will do anything immediately. So you could get an effective easing after April. And that you can achieve through more liquidity coming in and driving the short-term rates to the SDF rate. then your accommodative stance on rates and liquidity will be at sync. And that is why I think, RBI, once the OMO purchases are done for February 20th, which is the last one, for March, if RBI sees more tightening, suppose RBI sees, as Shobit was saying, they will go ahead and announce more OMO purchases or FX swap in March. Why announce today for March when you have 90,000 crore of liquidity is still yet to come? VRR is there today afternoon, and then 40,000 crore more of liquidity. So you'll have to just wait it out. And it's not like RBI has to announce everything in the next April policy. They can come in between as well as far as liquidity is concerned.
Okay. Let me just pose one more question on similar lines to Upasana. Upasana, are you getting a sense that they will be niggardly, or they will be very, very careful with liquidity? Or you're getting a sense that they will provide adequately? For the banks at the moment, the policy is negative. That is, the repo rate has been cut. And so at least between 5 and 7 basis points, there is an impact on margins. And they cannot, pass on they will not pass on the rate cuts to the non-EBLR loans at all. Do they have enough comfort on liquidity from a banker's point of view?
Yeah, I think to begin with, he did mention that proactively he will provide durable liquidity as and when required. So, and already as Kaushik mentioned, there are a lot of measures which are yet, this week, next week. We have the OMO purchases, we have the, VRR 56-day. All of that is still pending. So, RBI does not have to wait for a policy to announce liquidity easing measures. And at this point, February, in terms of durable liquidity, because of the measures which have already been announced, is looking kind of comfortable. So I think it's only in March where we start seeing again, even frictional liquidity tightness because of advanced taxes, accumulative year-end tax collections and all of that. So the scope for liquidity easing measures coming in March is much more. At the same time, the disappointment which probably markets are getting because of no change in stance, this is not warranted at this point because liquidity is tight. And in this environment, they could not have changed the stance to accommodative when, for that, they will have to do much more aggressive liquidity easing. When the global environment is so uncertain, I don't think it is the right time or opportune time to go all aggressive across all the board, across all the spectrum. So they need to necessarily look at every aspect and go slow. Liquidity, I don't see any reason why markets should be worried about. RBI is providing and they will continue to provide. They will need to provide as well. And I don't see any reason why the statements anywhere were cautious. They were all comforting to the market that we are there and we will be proactively looking at durable liquidity.
Okay, comforting, not comfortable, as Lakshman wants. He just wants an assurance or even actual announcements of liquidity, probably expecting FX swap announcements or, OMO auction announcements. But for all you know, Mr. Lakshman, they may come even by end of day or, very soon. Just a last word from Malhotra that I wanted. Malhotra, Shobit, you don't think that the NDS home market entry that you all are getting is big deal?
So it's already there with us. As mutual funds, we have access to NDS home. I think what he mentioned was certain brokers registered with SEBI will get access to NDS home. Yes, it will improve liquidity in the market. Anyways, government bond market liquidity is very good. The NDS home platform is a great platform for trading by banks, insurance companies, mutual funds. So we are already there on it. Insurance companies, banks, everybody is already on it. Now there'll be some additional brokers coming onto it, which perhaps may lead to some bit of improvement in liquidity, maybe in some, off-the-run securities and, that kind of a demand could get channeled through these brokers on NDSO.
That's right. I mean, RBI said that they will allow access to SEBI-registered non-bank brokers to NDSO, like you were clarifying. But Kaushik, if you look at the fine print again, it was a very quick, 30-minute speech from the governor, very short compared to what we're used to seeing. Any additional takeaways, anything we've missed talking about that you'll also want to hear in the press conference detailed?
Yeah, so you can ask if you get the opportunity with what kind of real interest rate the RBI is looking at, forward-looking policy. If you remember, under the previous regime, they had specified 1.4 to 1.9% positive real rates for, kind of deciding how much rate cuts can happen with respect to forward-looking inflation. Whether any thought, has changed at RBI with the growth numbers that we've got, are they willing to look at lower real interest rate, which could then, make up room for further rate cuts? I'm sure RBI will not give you that answer, but you could, kind of ask that question. The other thing is that I think the forecasts have become very realistic now. The growth forecast is at 6.7, which is on the higher side of the economic survey band of 6.3 to 6.8. At Deutsche Bank, we have a forecast of 6.5% growth for next year, but this is more or less in line. On 28th February, you know that the CSO will give the October-December GDP number, so those things can change. But generally, the growth number is pretty realistic, and inflation at 4.2%. Also, I think it's very realistic. We have a 4.3% forecast, but the positive real rate, whether anything has changed at RBI, that could be a good question to ask.
Sure. Just very quick forward-looking summaries from all of you. Upasana, starting with you. At 4.2% sort of CPI, outlook for the rest of the year, 6.7% GDP. What is the total quantum of rate cuts you're expecting in this cycle after the 25 basis points?
Maximum 50, but we are at, we can say 25 to 50.
25 to 50. Okay, Shobhit, what is your expectation?
I think my expectation is for a shallow easing cycle. I think growth number of 6.7 is still a little bit on the higher side. If growth disappoints by a big margin, only then we would probably get more than 50 basis points. But my sense is I don't think April will get back-to-back rate cut. Perhaps in the later part of the year, we'll get the second cut.
Sure. And very quickly, Mr. Lakshmanan, what is your sense, total quantum of cuts?
Yeah, well, largely be growth number dependent. 2 rate cuts for sure, maybe a third one, should the growth numbers be disappointing.
All right. So not a very steep rate cutting cycle is the expectation from here on out after the 25 basis point rate cut. On that note, Kaushik Das, Upasana Bharadwaj, Shobhit Malhotra, Mr. Tiwari, of course, Mr. Lakshmanan, thank you very much for joining us here and helping us parse through this very important policy. We've kick-started the rate cut cycle with an expected 25 basis point rate cut. On that note, from Lata and me, it's a goodbye and thank you very much for watching. Lata, to you for your final comments.
Well, I think the Reserve Bank Governor has played for continuity excellently well. Continuity and change beautifully blended. Continuity in terms of, that phrase which I was looking for is there, to align inflation to target. It's there, so very much keeping with that continuity that we are focused on the target, but giving himself that room by saying that we will concentrate on the flexible part of the flexible inflation targeting, also adding that regulation should also not take away too much from efficiency. I think it's a brilliant blend of continuity and change. For the markets itself, at the moment, the disappointment is there's only a rate cut. There is not that much of an assurance on liquidity or on the next rate cut by changing the stance. But I think that may be clarified in the upcoming press conference. That's what we will wait for. Whether there is more generosity in the way he tackles the liquidity questions and whether there is more accommodation in the way he tackles the interest rate questions. Excellent policy, I would say, and excellent use of language. With that, it's a break now, over to the stock market coverage and how the markets have interpreted it, and at 12 o'clock, back to the Reserve Bank.